Well, good afternoon, everybody. It's been a week. Holy banana bread. As you guys know, I did take the weekend off. I had my mom here for Thanksgiving, so we didn't do as much as I had hoped, but it was still a good time. Still a good time. Of course, my mom is now gone. Everything is now back to normal, and it's going to be the rest of the week. The second half of this week will be fantastic for sure. We got our live stream here today. Coming up on Friday, we got a deep dive coming out for you. If you're a channel member, you will be able to see that tomorrow. But by popular request, it's gonna be split core related. So if split cores confuse you, or or if you love them, I think this will be a cool video. So anyway, that's coming up on Friday, and we will be back to our normal Sunday as well this week with This Week. That was kind of odd. I said this week twice, even though they were technically two different this weeks. That's just the way it goes. I did start a couple minutes early today because I was like, why not? I'm sitting here, I'm waiting. You guys are waiting. Let's just hit the switch. Let's hit the switch. We technically aren't supposed to start for another minute and a half, but a little bit early, a little bit early. What can I say? I'm okay with it if you guys are okay with it. Let's get into the market. Let's jump right on in. Let's just jump on in. I'm gonna pull up our TSX, and as you can see, oh boy, what a time to be! What a time to take a short little vacation. We, of course, that began with Friday. We had a big issue, of course, Trump dropping tariffs on China. Everybody anticipating a pretty big, what is it? A return salvo from China. That didn't happen, but it sure did hurt the market. And we had a nice big plunge on Friday. It was, I imagine there was a lot of people panicking. A lot of people were thinking, this is it. This is the beginning of the bear market. Of course it wasn't. Of course it wasn't. We're looking fine. So we were lucky because with the markets being closed here on Monday for Thanksgiving, by the time they opened yesterday, we had that rebound starting. We rebounded most of the day yesterday, but we did have a little bit of a retrail. You know, we retraced a bit at the end of the day, but then today we picked right back up. In fact, earlier today, we hit, guess what? A new all-time high. So the market is just fine. Things are looking good. Basically, Friday, a very nice buy the dip opportunity. So if you guys did get any great deals on Friday, I want to hear about them. I want to hear about them because not a bad day to be buying, that's for sure. So today, we are in the green right now, currently up 0.90%. We're still in the green for the month. Although, look at this. Look at this little leap down here. Friday pushed us into the red for the month briefly. So let's hope Trump just doesn't do any other things between now and the end of the month so that we can keep our green month intact. So we'll have to sort of see how that's going. Looking at the S&P 500, similar but not story. We had, well, oh boy, you can really see the S&P 500 absolutely cratered on Friday, and they struggled. They did get back up, but then they fell right back below, and currently they're still in a red month. They're under that blue line. They are up 0.37 today, so hopefully later in the week we will see them push above the blue line. The fun of it. Here we go. And the Nasdaq, similar story. What a big candle. These are the type of candles you don't want to see unless you're shorting. Unless you're a shorter. If you're a shorter, this is beauty. This is beauty for sure. Or if you're looking to buy the dip, absolutely. But the Nasdaq definitely hit hard as well. Today they are up 0.77%, and they are back above the blue line. So they are back into green territory for October. I'm loving to see that. The Dow Jones is, well, they're not up today. They're down just a tiny bit, 0.04%. And on the month, they are in red territory. Russell's actually, Russell's actually doing pretty good. So those small caps, they're up 0.86 today, and they've done fairly well. Gold is having a pretty good day, up 1.61%. That's just not too shabby. And silver, well, silver wants to glitter a little bit more because they're up 3.17%. WTI pretty flat, pretty flat. They are technically up 0.1%. And oh boy, crypto is in the tank today, in the tank. We'll get to that when we get to the heat maps, and we're going to get to the heat maps right now. We'll start with the Canadian heat map, of course. Little bits of green, little bits of red. Couple of things really stand out for me. One, Celestica over here. They're up 8.91%, so that's not too shabby. Not too shabby at all. I mean, people were worried back here. They thought Celestica was in trouble when they had this little tiny bump, but look at them now. Look at them now. They're doing pretty darn good. Of course, your gold stocks are up big time. Like here's Barrick Gold up 3.95, Kinross up a full 6.08. London Gold up almost 2%. Yeah, a lot of goodness in the gold sector for sure, in the energy sector. Well, sorry, non-energy mineral sector. That's technically the better word for it. Looking south of the border, a little more red than what we're seeing up here in the good old Great White North. We got Google up today, 1.86%. Walmart's having a good day. Eli Lilly up a little bit. AMD still, look at this. AMD's been doing look at this. They were 164 back at the beginning of the month. They were at $164. Now $237.26. AMD definitely the play for October for sure. That's just absolutely fantastic. I'm loving it. I'm loving it for sure. All right, and as I mentioned before, Google, Bitcoin, crypto, what a red mess. Look at this, Bitcoin down 1.2, Ethereum down 2.46, XRP's down, Cardano's down, Dogecoin's down, Solana's down. There's a lot of down. Now, I do like to choose. I like to highlight my crap coin of the day, and I call it a crap not because it's crap, but because it's like playing craps. You're probably gonna lose with a lot of these coins. Let's grab this one here. What do we got? Alliance Games. Well, this is an easy one to understand. It's probably a gaming coin of some kind. I don't know what it does. It's not even worth a penny. It's worth 0.77 of a penny. I'm going to assume maybe it's an inline, maybe it's an online game, maybe it's an online game currency. Don't know. Honestly, I kind of don't care. But it's yeah, and it hasn't actually. This is a brand new one. They haven't even been around very long. So be careful, guys. These coins, you can make money on some of the crap coins or altcoins, but you want to be careful with them because there's a lot of them. I would say more of them will lose you money than will make you money. If you want some exposure to crypto in your portfolio, stick to the tried and true ones. Stick to your Bitcoin, your Ethereum, your XRP, your Solana, even the Dogecoin is a safer bet for sure. All right, let's get to you guys. Oh boy. Woohoo! Jonathan is in with an "Am I late?" Fantastic. It's actually funny. I think the last couple of streams, I think Jonathan's shown up just as I've logged out with an "Am I late?" So it's good to see you back on track again. Claude is in here with a hello. Good day today, but yesterday, wow, was it wild? Yeah. Not as wild as Friday, but yeah, I mean, and you're going to have days like that, guys. This is the thing. One of the things that can make you a good trader is when we have days like that that are absolutely insane, well, you want to do the opposite. You want to stay very sane. You want to stay calm. You want to look at it as for what it is. So the beautiful thing about Friday is you could pretty much see exactly what was causing it. You know, the whole Trump tariff, China, yeah, very clear. And that makes it easy. You know that that's going to be something that is going to blow over pretty quickly. So, what does that mean? That means that you're going to get an opportunity to buy the dip. That's pretty much what it means. It means that, you know, if you've got money that you've been sort of holding and thinking, oh, I'm looking to buy something. Well, Friday was a great day to buy something for sure. All right, Ian is in the house with a hand wave. And we got Brian saying good afternoon, everyone. And Paul is here with a good afternoon. And Stan says happy Wednesday, all. And Paul says a green plus 0.88% day for all accounts. Not too shabby. And we've got Nice coming to us from Sweden. Ah, Nice, always love to see you. It's always fun. You're my favorite person from Sweden. As far as I know, well, there is the Swedish chef. He's up there too. No, you beat the Swedish chef. Roku from Stittsville says, good afternoon, everybody. Are you back home, Roku? I think last time you mentioned you were in, was it Italy? I think it was Italy. Jim says, some of my stuff dropped 6%. Almost got it back now. Just one little buying flurry and 15 minutes left. Yeah, you got about 7 minutes left if you want to buy anything on the market today. Danielle says, hello, Elle. Hello, Candace. I was not home on Friday, so did not notice there was a dip. Sometimes, you know what? Sometimes it's not a bad thing. I mean, I'll tell you one person who was completely stress-free on Friday, and that was Danielle, for sure. Jim says that the chip deal between AMD and Oracle, AMD's been making a lot of moves. There's the Oracle, also that whole deal with Nvidia that sort of kicked things off as well. So AMD's looking pretty strong. All right. Claude says, not that I'm complaining, far from it, but do you know why HBTE doesn't seem to be so much affected by Bitcoin going down? One is that HBTE is much more diversified than just Bitcoin. So they're holding a lot of the Bitcoin related companies as well. So they've got everything in there from strategy to different Bitcoin miners. So sometimes if Bitcoin itself does a little price fluctuation, if it rebounds fast, it may not actually impact some of those tertiary type companies on the side. So for that reason, you might get a little bit more stability. Now, if Bitcoin goes down for a longer period of time, all of those companies that are very heavily reliant on Bitcoin, well, they're going to go down, of course. And then, of course, HBTE will definitely feel it then, for sure. But keep in mind, too, HBTE is also doing covered calls. So any kind of volatility that they do get is not really a bad thing. It's definitely good for the premiums. Jim says, go rug pull coin. Yeah, pretty much. Cowboys in the house with the greetings. Oh, and we got Larry. Larry says, I picked up 1K shares of DJCO again for 450 each today. It keeps giving me a 30 to 80K a week, so I'm going to keep playing it. Yeah, absolutely. If you find, and that's the best thing, if you find a stock in a channel, and I talk a lot about this. I got to pay attention, guys. I got 4 minutes, about 3.5 minutes until the bell. But yeah, if you find a stock that's moving in a channel, boy, you can make a lot of money off of that stock if it stays in that channel. But you also want to have a strategy for when it breaks out of the channel, because no channel is forever, that's for sure. And Pascal says, this market needs to cool down. Yeah, I would love to see the market just, I'm not going to say flat, but a nice slow bull market the rest of the year. That's what I'd love to see. But I think as long as we have Trump in the house, volatility will be normal. We will get more of these buy the dip opportunities before the end of the year is out, for sure. for sure, it's going to happen. So we'll have to sort of see. But there's a lot of people now. You may have also meant that you kind of think that the market might be able just to, overall maybe too hot, and that a lot of people think that. A lot of people feel like the market is overbought. The market is due for a correction, and it probably is. We are due for a bear market. It's coming. A lot of people think it's going to be a big one. I would. I think if there's a possibility it could be a big one, but I'm not ready to fully commit to saying, yeah, it's going to be a big one. Batten down the hatches. Not willing to commit to that. And I'm not willing to commit to it happening in 2025. I'm thinking 2026. I can't see us making it through 2026. But I will also throw in with that I said the same thing last year about 2025. So, I was dead wrong on that. Dead wrong. So we'll have to see. Rory is in the house with an afternoon all. Lisa says, hi, everyone. Candace, I hope you enjoyed your time with your mom. Yeah, it was nice. Last time I saw my mom, I hadn't seen my mom in person since 2021. So, yeah, it was definitely nice. It was definitely nice to see her. Yeah, what can I say? Gursky says, hello. Roku back now and gelatoed out. All right, fantastic. Just taking a look at the time, guys. 1 minute, 1 minute, 10 seconds, probably about 1 minute dead on right now till the bell. Let's see. Lisa says, I was on the road all day Friday on my way home from Algonquin Park, so I missed the dip. Well, hopefully you had fun at Algonquin Park. Paul says, Questrade now has overnight trading from 8 p.m. to 2 a.m. Eastern time. Haven't used it yet. Yeah, and that is going to be that will be undoubtedly just on U.S. stocks, guys. Cowboy says, grab Biggie Friday and IPO yesterday. Nice. All right, we got about 29 seconds to the bell. I've been lax lately. I've missed it a few times, but not today. Not today. I'm going to hit it on time. Gursky says, picked up some MSTE and BIGY today. Nice. All right. Ian says, Friday was not a black swan event. It was an orange swan event. I love it. Orange swan event. It's like a black swan, but normally does not last long. Yeah. All right, guys, it is time. And the market's closed. Woohoo. I love it. All right. Boy. And I was on time. Now, there's probably one of you sitting there saying, you weren't on time. You were 15 seconds late. Well, there's a delay. There's about a 15-second delay. It's roughly 15 seconds from when I do something and when you see it or hear it or whatever. So there is a slight delay. So, yeah. On time here. It might be 15 seconds late on your clock, though. Rory says, cool. And we got Mary in the house with a hello. Guys, Mary is our official captain of the like button. So if you've not hit that like button to turn it blue, oh boy, you better do it. Do it now. It really does help the channel. It basically, the algorithm, it's like finger food for the algorithm because it eats it up and it lets people know that it likes us, and that means more people can find us. It's a cool thing. Anyway, definitely do that. I'm gonna have some coffee while you guys are doing that. So good, and that's why I love Mary, because if left to my own devices, I would forget about the like button. I really would, but Mary does not let me forget about it. So fantastic. All right, Paul says, added more blocks ETF yesterday, which is like HBTE, but on the USA market. Very, very cool. All right, and guys, we got ourselves a super sticker coming in here from Kiev. Kiev and Kaz. There we go. You can tell I haven't been talking for a week. But that means that Danny here is our goat. So, yep, she's the goat. Definitely. A greatest of all time. Love it, love it, love it. All right. Let me get back to where I was because I saw that coming in on the side monitor and I'm like, oh, I got to get over there. I got to get over there for sure. All right. Let's see here. All right. And speaking of Kiev and Cas, here's an afternoon gang. Larry says oil at 58 a barrel. I've been scooping it up. Nothing wrong with that. And Roy says my eyes are on C&Q for oil. Yeah, absolutely. C&Q, I love C&Q apps. And you know, when they're down, I do add a little bit to the portfolio. Definitely. Lisa says, where does your mom live, Candace? My mom lives in Nova Scotia. Nova Scotia, which is where I'm from. So, you know, I'm one of those transplanted Nova Scotians living in Ottawa. But yeah, actually, she lives in Lower Sackville. If you know Halifax, it's kind of one of the little satellite communities around Halifax. Jim says, hi, Mary. I hit the like before you got on. Nice. Paul says, IREN miner is in blocks. Analysts raised price target from 49 to 100. IREN pivoted to AI data centers. Nice. Kiev and Cat says, my experience with overnight trading is that there are tons of pump and dumps. Ooh. That could very well be. I have no experience with it, guys. I have not traded outside of normal trading hours, and it's actually interesting. I've heard some people say the stock market needs to take the same kind of cue that crypto does and trade 24/7 all the time. And I'm like, no, it doesn't. No, I like my off hours, and I know, especially new traders. I love this. Like, there was somebody in the community. He's still around every so often, but he used to complain to me on when the market was closed for a holiday. He's like, I don't like the market being closed. I want to trade. I'm like, just relax. It's fantastic. And there's the night bot. So of course, guys, if we get 4 supers or 4 gifted subs or a combination of such before the end of this stream, we get a bonus stream on Friday. And we already have one, thanks to Danny. So Kiev and Kaz dropped that 549 super sticker. So we're only 3 away. Cowboy says, we will be going after C&Q in November as well as several more quarterly shares. Mostly oil and utilities, yeah. And I love, like, one of my favorite sectors is oil and utilities. Well, I guess technically that's 2 sectors, but 2 sectors that have a little bit of an interrelationship to them for sure. Larry says, maybe the biggest and most beautiful swan ever. Nobody has better swans than me. Oh boy, yeah. Good old Donald Trump. Good old Donald. You know, it was actually funny. When I first saw the big dip on Friday, before I heard the news about China, my first reaction was, oh, we didn't get the Nobel Peace Prize. That was my first reaction. But of course, it was China. But nonetheless, I'm still amused. I'm still amused by my first thought. Paul says, weird. In the last 15 minutes of the day, blocks went from negative 0.6% to plus 0.2%. Oh, interesting. And here's the thing, though. Some institutional investors have little time periods where they will jump in and look for buys, especially towards the end of the day. And that could be what it is. So sometimes you'll see some of the volume on the market. You'll see a lot of volume in the last hour and the first hour. Those tend to be the 2 biggest hours on the market. So, you know, to me, that's not that unusual because of that. Ian says, bought some more ENCL today/yesterday. Where is the bottom? Could see a dividend cut from ENCL in the future. Your thoughts? Can't find a payout ratio on it. It's not going to have a payout ratio because ETFs typically do not have payout ratios. Now, if you have a fund, if it's an actual company, that has like a fund. So, for example, something like Canoe EIT will have a payout ratio. Brookfield Asset Management, payout ratio. But a typical ETF, you won't get a payout ratio on it. Um, it's just not a piece of data that is even relevant. But what is the bottom? Depends on what oil does. Technically, if oil goes really, really low, ENCL will keep falling for sure. Agursky says, I wish the markets would have been open after Taco Friday. Yeah, I can understand that. That's one of those things when you have an event like Friday. You would have been nice to have markets open on Monday because there could have been some moves, definitely for sure. Paul says overnight trading is on Blue Ocean ATS Boats Exchange. Things get overpriced, then go back down in the pre-market. Okay. Tesla went up as well. I did not look at. Let's take a look. I didn't actually look at Tesla when we were over there. Let's just jump over here. Tesla. Here we are. Yeah, Tesla up 1.38%. Good old Tesla. What can we say? What can we say? All right, let's bring back me. Doorpat. Oh, I think I finally caught up. Hi all, last week and this week have been insane. I initially tried buying the dips, but for now I won't do anything anymore. It can feel insane. You got to be patient, guys. You got to be patient. So if you're doing, let's just say swing trading, because a lot of times this is buying the dips can sometimes be a form of swing trading. So if you're swing trading, you're buying low, sometimes things aren't going to work out. Like the channel members can tell you, I'm sitting on a few swing trades that they're going to be there for a while. And I already know that. And that's fine. I'm okay with that. If you're doing swing trades though, where you can't afford to let it sit there for a long time, then you kind of have to approach it a little bit differently. So you may have to approach it with a exit strategy. Because there are some swingers where they don't have a lot of funds. So they might make a swing, but they need to get out of it to make more swings. And in a case like that, they might, for example, get into it and have they might use a stop loss. They might say, okay, if it goes below this, I'm getting out. And then they do, and then they look for another target. They just sort of rack up the loss, but hope the next target is a win, and maybe the next one's a win, and then that outdoes their loss. So that is kind of one way. Now, I'm pretty patient. I'm pretty patient with the ones that I have. Like I'm okay. Like what I will do is sometimes when it comes to one of my swing trades, I may take a smaller amount of profit than my target because I initially will have a target where I want to go. But sometimes it'll go up and I'm kind of happy. I'm like, okay, well, you know what? I don't think I'm realistically going to hit my target right now because it didn't behave the way I was thinking. So I'm going to take these profits that are on the table. I will do that. And sometimes, and the channel members, I think, got to see this the other day. I will sometimes drop in my initial stop loss thinking it's perfectly in a safe spot. And then just out of dumb luck, it'll spike down to my stop loss and sell, and then it will turn around and keep going. And I'm like, no, that's not what I wanted to do. So, but that happens. That happens as well. It's kind of the whole thing. But the thing is you don't let it eat you up. You don't let it sort of define your trading. I mean, I look at it this way. If you walk away with a 1 penny profit, you've still won. It's not a great win, but it's still a win. So, just, you do what you can. I mean, and if that does happen to you, fine. Just go move on to your next target. Don't worry about it. Rory says, can CNR reach $140? Let's see. Yeah, I know. CNR's had a rough year. A rough year for sure. But, I have long-term faith in CNR. So, I'm not worried about them. Cowboy says CNR may be a target of Buffett. He likes his trains. And I like trains too. I like trains. Trains are cool. All right. Rory says, me too. CP is a good one too. And there's Get Rich. And I love the QQ. So, guys, the QQQ is when the chat gets kind of busy. And right now, let's see, what is it? This was posted, I'm only about roughly 5 minutes. I'm about 5 minutes behind. So when I start getting further and further behind, I have to start skipping stuff. So the one thing I'm not going to skip are the QQQ. So when you got a question, throw a QQQ, or if you don't like the QQQ, you can throw like a question mark, question mark, question mark. I'll recognize either. So either or. I just, I like the QQQ. I think it's cute. Cute with a Q. Qute. Yeah. Oh, Anyway, Get Rich Shorts says, I always wonder if coins are linked to Bitcoin. I mean, could we see, for example, XRP and Ethereum go up while Bitcoin down? And what's your thoughts on crypto lately in 2025? Expect a rebound. Bitcoin, of course, is that big coin. So because of it, it's kind of that whole thing. Like when Bitcoin goes up, everybody sort of experiences a little bit of a move up too. It's not that they're linked to it. It's that when people start getting excited about Bitcoin, it brings in new people, and then they start looking at some of the other coins, and then they're like, "Oh, well, look at this Ethereum. Let's get some Ethereum. Let's get some Solana. Let's get some XRP." And that will help push up some of the other coins. That's kind of the way it will go. And what's really interesting is, and we have to sort of see how this crypto bull run ends. But in previous bull runs, a lot of times as Bitcoin starts going out, a lot of money starts moving into some of the other coins. So people taking their money out of Bitcoin and putting it into Ethereum and some of the other altcoins. And you can sometimes see a little bit of movement in them even when Bitcoin's starting to wane, but they are their own thing for sure. But if Bitcoin crashes, it tends to crash everybody. It's not because they're linked. It's just because of the whole psychology of it. Because if Bitcoin is crashing big times, people get worried because maybe my coin is next. Let's maybe move out of this coin for the moment into something a little safer, because if crypto's going down, I don't want to go down with it. So sometimes you'll get that attitude as well. But what do I think for 2025? I've been talking about Bitcoin. I think Bitcoin's going to make it to 130,000. We have not yet. We've come close. I think we've got up to 126,000. I think we will hit the 130. I will even concede that we could go as high as 150, but definitely to 130. And I do think we will see. I mean, we're going to see a crypto winter. It's not going to be as bad as I think some of the previous crypto winters, but one will come. It's the way the market works. Like, the bear market will come. Crypto winter will come. When? Boy, I don't think it's going to be 2025. Will we break the 130 in 2025? I think we will. I think we will see it at least touch 130 before the end of the year. Paul says, Bitcoin has done nothing since mid-June. IBIT total return is only 7%. Yikes. Yeah. I mean, Bitcoin hasn't done a lot. Absolutely. We've been kind of back building for the whole year, but I still, like I said, I'm still adamant on that 130. Cowboy says, my trains are HO now easier on my back. Okay. Cyborg. A ZGLD gold price ETF call options up 66% in just a week. Been insane lately. Yeah. And gold, I'm very bullish on gold. I'm very bullish on gold. I think gold is going to be very strong. For the rest of this year, 2026 as well. So I definitely think, I think gold is going to be, I think it's going to be one of those ones that people who have been buying into it are going to be very happy. Rory, no 2-hour calls for HO operations. Hugamilio, is it a bad time to sell MSTE? That's a good question. One, obviously it depends on your situation, what you got in at. If you're well in the green and you're thinking, and you're not as bullish on MSTE, then there's nothing wrong with selling. There's also nothing wrong, and you don't have. It doesn't even have to be an all or none situation. So if you're in profit, some people will just say, "I'm just going to take a little bit of that profit off the table," and that's fine. Um, you know, will MSTE do better in the year? I think there's a possibility, but at the same time, keep in mind they're structured to provide you with to income. That's kind of what their goal is. So that's something to keep in mind. Paul says there needs to be an order type stop loss that sells, then buys back when it loops back up. um, that's an interesting thought, and I'll tell you why. Because I think not that far in the future, you've probably heard about AI agents. So this is where you basically give AI control of your computer, and it does whatever it is you set them up. This is probably something that I imagine you'll see people setting up AI agents to do for them. It's like, you know what? Sell here, buy here. I do think it's a possibility, but I don't think the brokers are going to offer it. I think that'll probably be something that just comes out of AI agents at some point down the road. Cowboy, or busted rails from a flat spot on a wheel at minus 30. Oh boy. And Roy says, we busted rails a few times. Paul says, institutions are still buying IBIT and MSTR. Yeah, absolutely. Because keep in mind, strategy got added to the NASDAQ this year. So, it doesn't mean everybody instantly goes out and buys. There are some companies that, for example, if they only update their ETF quarterly, they could be late. Or if there are some that only update their ETFs once a year. So you will still see some of the institutional investors loading up on especially on strategy. Let's see. Although season was only a week and a half then left, let's see. One of the YouTube influencers bought MSTE for more than 190K. Great payout, but geez, the capital getting destroyed. Oh boy, yeah, that's that's a lot. That's a lot. I don't know which influencer it was, but oh boy, I can guess. But we'll have to see. Oh boy. Does his name start with an A? RD says, hi, banana bread people. Paul, lots of altcoins are priced in Bitcoin, so if Bitcoin goes down, the altcoins move right away, then adjust for their fundamentals. Okay, fair enough. Danielle says, I sold all of my IM Gold shares when I was around $10 to $50. 10, 50, 11 in August because I had made 175% profit and was scared that it would go down. Now it's $20. I try not to think about it really hard. It's, you know what? Once again, you have profits. If you have profits, you're still a winner. You still won on that deal. You can continue to watch gold, and maybe if you see gold retrace, maybe you can get in. You might end up getting in higher, but I think there's still room for some profits there for sure. Jim says there's still lots of your Mon Gregory with cryptocurrency and news stations will still get ratings hits on the bad crypto stories. Oh yeah, and that's the way it is. I mean, even YouTubers. So you look at, you don't see it that much in Canadian YouTubers, but in some of the US ones, they will look for any little piece of bad news that they can find, and they'll blow it out of proportion, and it'll look like the world's coming to an end in the thumbnail, and it really isn't. You got to take things. I understand that, you know what? Sometimes the truth just doesn't sell. Sometimes it doesn't, because the truth can be boring. So sensationalize it. And, a lot of times that's what YouTube kind of forces you to do. Sensationalize it to get the clicks. I'm okay if you can sensationalize something if you've got something there. But, don't promise me something in a thumbnail and then don't give it to me. Because I know myself as a viewer, that's the type of thing that makes me not want to watch anymore. All right. Danielle says, I had 15,000 shares. Holy banana bread. That's not too shabby. If you have 15,000 shares, that sounds like you've got a pretty good profit in there. All right. Are you holding any of the bi-monthly ETFs? One, I believe, yes, C-Day. I think I've got some C-Day on one of my accounts. Let's see. Claude says, I try to sell small amounts at a time when it goes up to ride the wave as best as possible. Yeah, you can also do, we talk a lot about dollar cost averaging. So dollar cost averaging, you're buying it, at intervals. Well, you can do the exact same thing, but you can also do a sort of a version of dollar cost profit taking, where as it's up, maybe one, if it's, let's say, if you're getting a nice bull run, it's like, okay, every week as it's up, I'll take 10% of my profits off the table. That's one thing. That's one way you can do it for sure. Paul, is Cowboy talking about model trains when they say HO? Apparently, yes. Okay. I wasn't sure. What's a stop loss? All right. A great question, Defense. So, a stop loss, it's a type of order. So when you're in your broker, you have different things. Like you can buy a market order. So a market order, what that does is it will buy at whatever the price is on the market. Then you can do a limit order. So a limit order is, so for example, and you know what? Let's do it. Let's bring it up. Let's bring it up here. Here's Canva, and I want a whiteboard. All right. So tools. Give me some tools. Give me a pen. All right. So let's say a stock currently is priced at $10. And you're thinking, that's a little bit too much, a little bit more than I want to pay, because, if the stock is on a high, and let's just say, for example, this has been kind of the way this stock has been moving. So if the stock's been moving a lot like that, and we're sitting in here, you might say, well, I don't want to buy it here. I want to buy it the next time it drops down to here. And we'll say that there is, we'll say $9.75. So what you would do is you would set a limit order. There we go, limit. So what that will do is if the price goes down to $9.75, it'll execute. So, if you said I want to buy 100 shares at $9.75, you put that in as an order, and the only way it will happen is if that condition is met. So that there is a limit order. We'll just call it LO, limit order. Now a stop loss. If you wanted to do a stop loss at $9.75. So what that means is if you bought this up here at 10 and you're like, all right, I'm worried about this. I don't want it to fall. And you're worried that it could fall, but it could also has a potential to go up. In this case here, we'll do it. We'll make it a little more uppy. You could put in a stop loss at $9.75. So what that would mean is if this price dropped to $9.75, it would sell. And this would be a defensive thing. So you would be using this as a defense. Now, why would you do that? Because you're thinking, oh my God, that might create a loss. In this scenario, yes. But if you have a stock that is, moving like this, so let's say you bought in initially at $8 and it's now up to 10. Well, by putting that stop loss at $9.75, what you're doing is you're preserving your profit. So if all of a sudden this ride stops and it starts going down, which could happen, well, guess what? You're good. You've got your stop loss in here. Now, when you set up a stop loss as well, you also get a limit with it, just to sort of give you an idea. So you might set it at $9.75. You'll say, okay, yeah, that's my stop loss, but I'll have a limit of, let's say, $9.70. So what this means is that when it's falling, it will only sell between 975 and 970. So if it falls too fast and it goes right through that before you can sell it all, well, down here at 960, if you've still got shares left because it didn't manage to sell it all in that little range, it will not sell them, because obviously you don't want to take that big of a loss. You're going to wait that out, obviously, until you come back up. Now, the beautiful thing is, it's a good way to preserve wealth. And this is what will happen with me. So when I'm doing a swing trade, here's my channel. I got a stock in here that I am consistently trading. Well, eventually that stock's going to break out of the channel. So let's just say, for example, in this case here, that's my $10 channel. Let's say it's been going between $8 and $10. And we'll say this is long term, But in this case here, I might put in my 975 right here. And then that way there, it's above. I'm already in. I bought it down here. But what I will do is, as it keeps going up, I'll edit my stop loss. So maybe at this point I'll have my stop loss at 10. Maybe up here I'll have my stop loss at 11 if it keeps on going up. As long as it doesn't come back and hit my stop loss, I'm good. Now some brokers have something called a trailing stop loss. So we'll call it a TSL. So a trailing stop loss, it will do that automatically for you if you happen to be lucky enough to have a broker that does that. So that's kind of an interesting thing. Now, one little thing about stop losses, guys, is you're going to have a share price. So your share price might be $10. All right, and you're going to get two other prices as well. So let's just say 958, and these are going to be your bid and ask numbers. And we'll put this one at 959. So basically, the way this here works is if you're buying, you're paying that. If you're selling, you're getting that. That's the way these spreads work. So when you're looking at a stop loss, the stop loss does not look at these at all. It does not look at the buy ask. It looks at the price. So if you had a stop loss at 975, as I mentioned before, and the bid ask actually went to we'll say 974, 975, but the main price, let's just say it only went to 976. That stop loss will not be fired. This main price is the one that has to break down to 975. So that's always something just to keep in mind, because you will see sometimes if the market is volatile and moving fast, that this price takes a lot longer to change than these. These are moving, these here update by the second. Sometimes that it might stick at 10 while it's going lower and lower in here. So you could miss, and that's one of the reasons that I like to have a half decent range. Like usually in the stuff I trade, I usually have like anywhere from 5 cents to 10 cents as my range, just to make sure hopefully that it doesn't miss it. Anyway, Defense, I hope that answers your question. I know I kind of went overboard. But that's what I do. And Combos with JJ in here. Howdy all. Good. JJ, reach out to me later. We need to get that podcast scheduled. It would be nice. It'd be nice to get it done this week, if we can fit it in somewhere. Paul says, Millionaire JJ is here. He revealed on YouTube Gary Gill channel. Oh, JJ, are you a millionaire? Holy banana bread. Yep. Cowboy says, yes, Paul. All right. Politicians, what's I miss? Silver plus gold gonna crash soon? I don't think they are. I don't think so. As long as we still have a lot of volatility, people are going to be turning to gold and silver just to preserve wealth. That's going to keep them strong, probably at least for the next year. We'll have to sort of see what happens beyond that. But I'm pretty good on gold and silver. Paul says, Is there an ETF with gold and gold miners? Um, yeah, you would look up gold producers. So yeah, any ETF. So for example, and let's just do it. Let's do it. Let's come back over here. We'll go over to, as soon as I can find it. Here we are. If you just come in here and type gold producer, here we go. Let's see here. Maybe we need to put it in all the way. Oops. Gold producer, here we go. So here, AMAX, for example, at Hamilton. This here's your Hamilton gold producer yield maximizer. So this is, of course, yield. But yeah, gold producer is that word. So Global X, right here, Global X Gold Producers Index ETF. So GLDX, that's miners. Those are all miners. That's what they usually call them. ETF world is producers. All right. And let's see here. Tom is in the house. Let's see. The 190K MST man's initials are GG. GG. I don't know. I don't think I know who it is. It's not popping to my mind right away. I probably know who they are, but it's just not popping in. Jim says clickbait news reports. All right. And yeah, XGD as well. Right there. Claude, you got it. Rory says, I like EIT. Don't own it, but it pays mid-month. I may buy some Canoe on the dip. Yeah, Canoe's pretty good. And Reverend Ramirez, I also definitely need to learn when not to sell. I got scared. I sold Doll, Meta, Google, Palantir, made a profit, but could have made way more. How can I avoid the fears and hold longer? Well, stop losses is one way to do that. And keep in mind too, you can create a stop loss, and when you create it, well, normally it will expire at the end of that trading day, but you can change your expiration on it. I know, actually, with National Bank, I'm pretty sure that there's even a never expire offer in there as well. So yeah, if you put stop losses in there, and then as they go up, just slightly move them. The problem is with stop losses is you don't want to put them too close to the price, because if you do, well, kind of what happened to me this week with some of my swing trades, the price, hitting that stop loss. So, but yeah, stop losses are a great way. Here comes the whiteboard. Yep. I got to find an opportunity. I got to use the whiteboard at least once a day. And the coffee is good too. Rich with Rich. I have a 10-ounce silver bar. Should I sell it? It's at like an all-time high. I bought it for like 250 to 300 like 15 years ago. Holy banana bread. Here's that. I mean, this is kind of that thing, right? Yeah, silver's at a high right now. So if you sell it, it's not a bad move. I mean, you're probably, I don't know what you paid for, or, there you just told me, 250 to 300. You're going to make a nice profit. You're going to make a very nice profit on that. Will you make more if you wait 6 months? Maybe. Now, I think you will, but it's still a maybe, because nobody knows the future. If you did, well, if you knew the future when it comes to investing, you'd be a very rich person for sure. So, it's up to you. If you need to, then do it. Absolutely. If you don't need to, or, if you do feel bullish, of course, do your research. Make sure that you're certain that you're bullish, and don't just take my word for it. In that case, then holding it's not a bad situation either. But nonetheless, if you do sell it now, you're in big time. It's a good move. It's still a good move. Let's see. Paul says, Reverend, hold TSLA or MSTR and not selling at dips. Build your courage and not freaking out in fear. Of course, that's the thing. There are certain stocks that, and this is kind of one of that thing. So you guys know we talk about beta. So a beta number on a stock, that basically a beta of 1.0 means that it is the same as the market. So that's the market average when it comes to how volatile a stock is. When you start getting higher betas, yeah, you kind of have to approach those with a little bit of um, we'll use those words, diamond hands. You got to kind of have to diamond hand it a little bit until you're ready to sell. Like, have a plan. Go into it with a plan. Don't get shaken by the movements up and down, especially if it's a volatile stock. You just want to, you want to have an exit strategy. You want to have a basically just a game plan. A game plan it's a great way to go in, especially if you are prone to those emotional triggers that can happen with investments. Let's see. Stop losses do not really work for strategy or Tesla as they can vary a lot in a day. And that's exactly what I'm talking about, guys. So if you do have a stock that's super volatile, it can jump over your stop loss or move through it so fast that you might only manage to sell a couple of shares. That's why that limit's kind of important too, right? Because you have to have a bottom limit. Say, all right, especially if it's like I'm only selling it in profit. Well, sure. Make sure that limit reflects that, and that way there it doesn't jump it and sell it below that limit, because that could be a bad thing. That could kind of ruin your strategy, especially if it's a stock that is going to bounce right back up afterwards. Danielle says, if you wanted to invest in gold in this crazy expensive environment, would you go with an all-in ETF, a company like London or CC Angigo from Harvest? The smart move is an ETF, no doubt about it. I get into London, so I got into London in the challenge, but I got in early. So I still love London Gold. I think London Gold is still going to do well. And they're double dividending. So they're basically, what I mean by that is they're dropping a dividend quarterly plus a bonus dividend. So you're getting 2 dividends every quarter. That's not too shabby. So they are paying it back. But here's the thing. Has the big movement in gold already happened? Like the really big moves? I think it has. I don't think going forward we're going to see movements as big as what we have already seen. So there will be localized big movements. I think there's still going to be a good move to the upside, just at a slower pace. So it's still an upward slope, but perhaps not as steep. ETFs, though, they will capture, if one of them does have a crazy movement, they're going to capture that as well. So that kind of makes it kind of good. And if one of them has a bad day, or one of them has a bad a mine, so you can have a situation where a mining company, perhaps they have a mine in Ecuador and a war breaks out, or the government just sort of says, no, we don't want this mine operating right now. Well, what can that company do, especially if all of their eggs are in that basket? So it can happen. So an ETF will protect you against that. So yeah, ETF's a smarter play. No doubt about it. Where gold, though, is moving up, so you might say, okay, should I get a covered call ETF? Well, if you want the income, yeah, but you will be trading that for the lost upside potential. I think a regular gold ETF is probably going to make you the most total return over the long run. All right, and Rory's saying, yeah, gaps. Oh boy, yeah, gaps can be big. 2x and 3x will do that. Yeah. Once you start bringing leverage in, oh boy, yeah. Danielle says I already have HHIC. Yeah, I like HHIC. I do have it as well. HBTE, way better than MSTE. Thanks to Candace, I bought that one. My guardian angel. Oh well, thank you. I do like HBTE quite a bit. So that's probably not a bad choice. Huggy Mellow. There we go. Defense says, thanks a lot for that information about stop loss. Helped me a lot understand. One question, though. If you have a stop loss at 975 and it goes to 960, then goes back to 975, the $20, will it sell at 975? That's a great question. I think it probably will, logically, but I think it will depend on your individual broker and how they handle it. But yeah, I think it probably will, because it's still in there. and you've moved back into that range. So I would be kind of inclined. So if it went through my stop loss, I'm probably going to, I might remove the stop loss unless I really still want to sell it. That's kind of the way I would look at it. But yeah, I think if it goes down and then comes back up into it, yeah, it's probably still going to execute because it's still an order that's saying sell it in that range. So yeah, it would. Let's see. Cowboy says, thought about London Gold 3 months ago. Was too expensive for my taste, then sure gained a lot. Super beyond my budget for sure now. Oh boy, yeah. Morale, you missed me. I did. Absolutely. I missed all of you guys. It was kind of weird. Having any day where it's like I don't even have to think about the channel. I'm like, what the heck? Um, Rich with Rich, Mr. Gill is the 190K. Gary, that's it. Yeah, I know Gary. Yeah, Gary Gill. There we go. Rory, I did market orders on Friday. Worked well. Stupid me. I did it yesterday for HYLD and got filled higher. Don't hardly ever do market orders, but I wanted the shares. Yeah, I know. Canoe never increases that 10 cents per month dividend. So far they haven't. As much as I would love to see it go up to 11 cents, I just don't think they want to. But man, you never know. But gosh, I would love to see it. It's only a loss if you sell. True enough. Yeah, that's why when you're down and you're in the red, it's what we call unrealized losses, meaning it's not really a loss until, as Cowboy said, you sell. And that's where you got to be careful. If you're selling just because you're afraid, because it went down and you're like, oh my God, it's going to zero. Well, if it has good fundamentals and you sell at that point, well, yeah, you've just realized that loss. It's tough. But there are times where it can make sense to take a loss. So for example, if it's in a non-registered account and you're trying to do something called tax loss harvesting, and a lot of institutional investors do a lot of this. So it's one of the reasons, like let's talk about the Santa Claus rally. Why do we have a Santa Claus rally typically? Well, it's not because Santa Claus is out buying stocks. No, nothing like that at all. There's no reindeer. There's no elves buying stock. It's because of tax loss harvesting. So as we get towards the end of the year, a lot of the institutions and a lot of companies, they start doing their tax loss harvesting in December because they want to, they want it on this year's taxes. So early December, there's a lot of tax loss harvesting, meaning that they sell. So they sell companies, they take a loss, and they usually sit on that cash. At least initially, until all of the tax loss harvesting is done. So you got these companies who are now sitting on a bunch of cash. They've now basically forced the market to go down a little bit. And then they start buying again. And when they start buying, and a lot of times it actually begins right around the beginning of the month. So the Santa Claus rally goes from the day after Christmas, the day before, the last market day before Christmas into, I think it's 2 market days, or the 2 market opens after the new year. So that's where you get a lot of that institutional buying. So a lot of times that institutional buying, because they have that money from the tax loss harvesting, that's what causes that bump. Because it happens, late December, people have nicknamed it the Santa Claus rally. So anyway, that's what the Santa Claus rally is. We'll be talking more about that as we get further into the year. Paul, those silver bars, when they sell, is that a capital gain? Technically, yeah, technically. Now, mind you, I imagine, Paul, there's probably a lot of people who will sell it and not claim it. But you are legally supposed to claim it. Absolutely. It is technically a capital gain. Cowboy says, miss 100 shares of CVE by 1 cent. That was my last limit buy. And Roy says, I missed Bank by a few cents. Bank is a nice div for sure. I do like Bank. Oh boy. Gold ETF I have is GDXY and IAUM. Nice. All right, we got the Nightbot. Nightbot talking about a thing, an extra stream. So yeah, guys, if we get 4 supers or 4 gifted subs or a combination of either before we're finished today, we throw on a Friday stream. We already have one. And I do see something else here has popped up. All right, this doesn't count, but it does count it counts anyway. It doesn't count towards the show. This is channel members get a free super every single month, and you'll see this here. Member for 22 months. Don't let your RRSP get too large when older. Melt. Yeah, meltdown. That's what Paul is referring to. So, yeah, one of the big problems with your RRSP is when you pass. When you pass, what that means is that anything in your RRSP, unless there's one exception, is if you're giving your RRSP, if you're signing it over to your spouse, that's fine. That's fine. That there is that's cool. But if you're leaving it to one of your kids or something like that, if you don't have a spouse, that money will be taxed 100%. So the RRSP is a horrible way to lose money to the government when you die. No ands, ifs about it. So one of the things a lot of people like to do is something called an RRSP meltdown. That's where you basically start pulling that money out of your RRSP, to make sure you don't have a lot of it left when your days are finished. And when you hit retirement, if you have a lot of money in your RRSP and you don't have a lot of money in your TFSA, you might want to consider pulling money out of that RRSP, moving it into that TFSA. Now, the TFSA has a much better tax treatment when it comes to leaving it to your beneficiary than the RRSP for sure. But with that being said, you still have to keep taxes into consideration, because when you're doing that, the money you're pulling out of the RRSP, it's still taxable. It's still taxable. So, you don't want to just sort of say, oh, well, I'll just move it all into my TFSA right now, because I got the room. Well, no, if you have like $60,000 sitting in your RRSP and you pull the whole thing out, you've just created $60,000 in income. So the tax man will hit you on that for sure, in addition to whatever supports you have. So you might want to do it slowly over time. Like, especially if you have a year where you've got no income. Oh boy, that's a wonderful year to move money from your RRSP over to your TFSA, because you can take advantage of some of those limits before they really hit you with taxes, or even going higher and taking at least the lower tax rate on the additional money for sure. All right, let's see here. Paul says there was a 3x short ETF in the States that when AMD went up 30% in a day, the ETF was liquidated. Oh dear. Yeah. Oh, that's the danger. That there, guys, is the danger of a 3x. Oh, I don't need to have that up right now. All right. Oh boy. Cowboy. I remember having to pick up 500 1-ounce bars at TD for my boss in the late 70s. Was about $1,000. Be nice to have that bag today. Oh gosh, yeah. Rich with Rich, can you explain the difference between covered call ETFs and split funds? I can. They are completely different. Here's the thing. I will... the next video. So I've got a video dropping here on Friday that explains what split funds are. And so I don't want to defer it for that, but I'll give you this here as a basic idea. So with covered call ETFs, you're writing covered calls. You're using options. So there's trade-offs and all of this stuff here when you're building that up. So you do have things like, for example, loss of upside potential, all of that stuff, but it creates a really good income. When it comes to split funds, basically they're taking some of your favorite stocks, usually blue chip stocks, and they're kind of splitting it up into basically preferred shares and Class A shares. So they split it into 2 different types. That's where the word split core comes from. So the preferred shares, they will get, basically they'll get the dividend. They'll get the dividend that are coming in through it, and they will have preference. That's why they're called preferred. So they will get paid before the people holding the Class A share. So that's the other share. Now the Class A share gets all of the growth, but they also get that a lot of that gets liquidated into basically into cash. So when you're holding a Class A share, you're getting a pretty good dividend, and you're also getting some growth, depending on the fund. Not all of them are like that. There are some that are questionable, but here's the thing: they're structured in such a way that the net asset value, so that's the NAV, the Class share shares have to hit a specific NAV to be able to pay out their dividend or their distribution. So if they fail to hit that NAV, especially during downtimes, they can suspend dividends. It's part of the way they're structured. So basically, it's done to preserve the capital, because the capital is really important in those funds. So that's one of the downsides. So that's one of the reasons, like when it comes to split core, and I've always been very adamant about this, is that I'm leery about holding them in bad markets because of that suspended dividend. But that is part of their structure. It is a defensive move. It just sucks if you're counting on the dividends or on the distributions. Now, the video that I'm going to be dropping, we're actually looking at an ETF. A split core ETF is the main focus. So it is a deep dive on CLSC. I think that's I think those are the ticker. And I'll explain what things are, but what that does is if you have an ETF that has a whole bunch of split cores in it, then that whole suspension of the dividend or of the distribution, it is not a big deal. So anyway, I'll talk a little bit more about that in the video that's coming out on Friday, but it is a great question. They're completely different vehicles. Now, split cores, I will point out as well, they're a Canadian instrument. Like, you don't find split cores in the U.S. market. And the ETF that we're going to look at is the first in Canada, so it's pretty darn cool. All right, let's see here. Defense says, do you know what happened Friday? I lost so much. If you didn't sell, hopefully a lot of that loss has been recouped already. Yeah, what happened on Friday is Donald Trump decided to hit China with some tariffs, and it caused the market to crash big time, because I think a lot of people were afraid that China was going to hit back. China didn't, but I think a lot of people thought it was like poking a bear. So it certainly did impact things a little bit. Paul says, holy banana bread, 22 months in a row. I know. I know. Oh boy, it's like we've been around for a while. Guys, there is a schedule. I did get the schedule up, and we have an extra little live stream in there that we're going to do. It's basically our 4-year celebration. We're just going to talk about a few things. There's going to be, it's going to mostly just be talk. It's just going to be talk. You can still bring questions if you want, but we'll just have a little bit. It won't be that long. Usually those celebration streams, half an hour to an hour type thing. So that will be fun. Now, I will point out that there's a couple of little changes. So, as you know, last year I went and changed from StreamYard over to another provider, I guess, stream provider. I am looking to do that again this year, because StreamYard, they basically begged me to come back last year and gave me half price off. So that was fantastic. But I am thinking of I'm actually thinking about going with OBS this time around. And part of it is that I've got this new fancy thing here. And it works really well with OBS. It's called a Stream Deck. So I'm going to get this all set up with OBS. And so yeah, it might change the look a tiny bit, but for the most part, it's going to give me a lot more. It'll make it easier for me to switch screens, things like that. So I'm looking forward to it. That's coming up. I have about 50 days left right now on StreamYard. So I've got 50 days to get that all set up. I'll probably have it up and running long before the 50 days is up. All right. Iran says a mental stop loss means that you will watch the stock and sell it if it drops below your limit. Okay, fair enough. Fair enough. Let's see. Defense says, yeah, not lost, but still recovering from Friday's drop. Okay, good. Good. Just, yeah. Be careful when things like that happen, because the last thing I want to see is people, especially in this community, giving in to like FUD. So fear, uncertainty, doubt. Yeah, let's not let our emotions get the better of us for sure. They are little investors. Volatility are the footprints of idiots that I use to get stocks for cheap. This is paraphrased, but it is a Warren Buffett quote. I'll post the entire text later. Awesome. Paul, Friday I only lost potential gain. More funny, the downtrend started October 1st. And let's see. Roy says, I've been listening to Charlie Munger lately. The man sure had a sense of humor. Oh, yeah. Very smart guy. Very smart guy. Cowboy, heard you can pull $15,000 a year in all provinces except Nova Scotia tax-free. Nova Scotia taxes every dime you get. Oh, you are right. Actually, it's funny. When I used to live in Nova Scotia, one of the running jokes is that the taxes in Nova Scotia were so high because they wanted to keep people from leaving. So, don't let them have enough disposable money so they can leave. It's a beautiful place, but yeah, the taxes are crazy a little bit. Rory, Newfoundland just went conservative. That's a new direction for them. Yes. Yeah, the PCs just won the province. I think the Liberals have been. I think they were. It was either 3 or 4 terms. It might have been 3. I'm thinking 3, but it could have been 4. Paul says converting RRSP to RRIF before year end to take the minimum withdrawal as monthly income in 2026. That amount all depends on the year and balance. Age 58 is 3.13%. No withholding tax. Pay tax 2027. The new fees aren't fed up with Liberals. Oh boy. Danielle, planning to start the RRSP meltdown in 2 years when I will be 55 years old. I agree, Paul. Tax planning is important in retirement. Absolutely. Let's see. Worked with them in northern Alberta. All right. We've got a few here. Oh. I just noticed something else here. We've got a super. We got a super here coming in from Larry. So guys, that puts us two away from a Friday show, and Larry is our new goat. We got Kevin Kaz and Larry both in our goat pen for the moment. Awesome. Thank you very much, Larry. And what if I tell the government you don't believe in taxes? Oh yes. Well, it's actually funny. I've heard a lot of people argue that that income tax was supposed to be a temporary thing to help pay for the war effort, but I don't know. I live with the taxes. What can I say? All right. What can I say? Let's see here. Danielle, a RRIF has no fees with each withdrawal from broker. An RRSP has fees from broker with each withdrawal, like $50 a time. Yeah, when you're if you're withdrawing from your RRSP, they will hit you with a withholding tax. And basically that will then go to the CRA, but you'll get it back at, if you have not made a lot, you're going to get that back in, when you do your taxes. But nonetheless, yeah, you pay it up front. All right, let's see. Thanks for the info. Yes, I started with split funds when I first started following Adriano. I just finally got out of all of them and went to covered calls. Yeah, I do like covered calls better than split core, but I will say one thing. I do like this ETF. It sort of solves the biggest issue I have with split cores, and so check out the video, Rich with Rich. I think you'll like it. Cowboy, still baffled why Canadian tariffed EVs from China. We when we don't build EVs, that was more of a let's appease America. That's exactly what that was. That was the Trudeau government at the time deciding that you know, we're just gonna, you know, keep America happy, and we're gonna do this. That's kind of the way that is. So yeah, I would love to see those dropped. That's for sure. All right. Bleak is in the house. Hi, Bleak. Rory, Stream Deck beats out 8 track? Yeah, I think it does. I think it does. Oh, guys, I'm just noticing. I'm noticing. We got some action. We got some action here. All right. We got, let's see here. Oh, there we go. We got Paul in with a super sticker for $1. That puts us one away. And it also puts Paul in the goat pen with with Kevin Kaz and Larry. And Defense brings it home. Defense brings it home with a $2 super sticker and a see you Friday. Awesome. And that means, guys, we got one last goat entering into our pen. So we got 4 goats. Friday show, fantastic. I can't wait. We'll be here on Friday for sure. Okay. Now, where the banana bread was I? All right. So now we can ignore the Nightbot. We can ignore the Nightbot. All right. Let's see here. Cowboy. I love this idea. I love this idea. They should stop taxing you at retirement. Absolutely. Well, yes and no. I do love the idea, but at the same time, I think what they should do is they should have different tax brackets at retirement. So, for example, you know, if you retire and you're still like, if you're worth billions and you're making a ton of money, yeah, you should be taxed. But I would even say if you're making less than, maybe put the free, like no taxes on the first 50,000. I would be happy with that. Then yeah, I think that would be fine. But at the same time, I would rather have no taxes right across the board for retirement than no changes to the way it is right now. Because yeah, there's a lot of seniors out there that are being taxed to death, and you know, if you've paid your taxes all through your working career, give them a break. Give them a break. All right, Google opinion surveys pay for the super chat. I love Google's opinion surveys. That's always funny. You know, I find that hilarious, but I love it. I love it. Rory says yes, they should. Cowboy, tough enough making ends meet without taxes. Yeah, absolutely. All right. I'm as I said, guys, I'm gonna try to jump over the things that are politically spurred, but Paul says, Doug Ford says, do not take off the China 100% EV. Oh, I thought he said to do it, but maybe I misread it. I only saw the headline earlier. But Manitoba and Saskatchewan want the EV tariff off to remove their canola tariff. Yeah, I think we should remove it. You know, I don't think there's any need right now. If anything, we should be doing things to encourage trade, not create more barriers. We get enough barriers with the U.S. Paul says at 65 you get extra tax credits. Okay, fair enough. And, you know, once you get to 75, at least you get a bit of extra OAS. Let's see. You guys realize you have to pay tax on your salary, then you have to pay taxes on the goods you're buying. Oh yeah, you're getting taxed from every angle. It's just it's terrible, but yeah, every angle they're getting you. You can't hide from the tax man. Cowboy with a spine he couldn't have had up. Okay, boy, that was one I probably shouldn't have read. Love you. I love you, Cowboy. Brian says the extra tax credit at 65 is just a little more than your OAS. All right, non-refundable tax credit. Just got disability tax credit to save on taxes. Oh, fantastic. All right, guys. We're pretty much at the end here, but if you got last minute questions, get them in quickly. You know, we'll take care of them if you get them in quickly. But the clock is ticking. The clock is ticking. We get to add 7K again for our TFSAs. Did they already announce it? I didn't notice it, but I was assuming it was going to be 7K. I was hoping for 7.5, but 7K, yeah, absolutely. And guys, keep in mind, if you've taken any money out of your TFSA this year, you get that back too. So you're going to get if it's 7K, as Rory says, I think Rory's right. If it's 7K, you're going to get 7K extra contribution room. And if you took out, let's say you took out 5,000 sometime during the year, you'll get that 5,000 back. So you'll end up with 12,000 coming back in. So, not too shabby, not too shabby. Rich with Rich. If I borrowed equity from the home and move it to a non-registered account and do covered calls, how are the distributions taxed? And would the interest on the HELOC work? Would that be tax deductible? So yeah, if you borrow equity from your home, all right, so there's your chunk of cash. That's not going to get taxed, that cash, sorry, I think I said cats, but that cash is not going to get taxed at all. However, any of that income, so you're looking at a non-registered account, so the income coming off of those covered calls, they will get taxed, depending on the tax profile of the covered calls. Now, you're going to have probably some return of capital that won't get taxed. That's just going to move your adjusted cost base down a bit. So, you will get taxed on that later when you sell, but you might also have, for example, you might have some capital gains in there depending on the ETFs that you're using. Those will get taxed at, 50%, just like a regular capital gain. And then there might be as well, you might have some other things in there too. You might have a little bit of foreign income. You might have some eligible dividends, non-eligible dividends. Those will all fall under different tax rates, but you will get taxed on that. Yeah, absolutely. But it's not the money that you paid for from the house. It's only on the money it's making that's going to get taxed. And at the end of the day, if you start selling those, like let's say you decide I'm going to pay off that house and you sell some of it, then you got capital gains as well on that that you would be paying. All right, let's see here. Defense. Actually, people said they respect Carney a lot in the U.S. because they say he stands firm in front of Donald Trump. I think with Donald Trump, though, if you can go in and have a meeting with Donald Trump and you don't come out with a bad experience, even if nothing happens, it can be a bit of a victory for sure. Cowboy says, I heard 7K as well. I kind of believe that. Yeah. Rob Ford was hilarious when the camera guy smacked him in the face. Oh, boy. What's a non-eligible dividend? So, okay. So, eligible dividends are dividends mostly from Canadian companies. So, if it's a Canadian company, it becomes known as a Canadian eligible dividend. Not all, but most, as long as it's recognized as, I don't want to say Canadian content, but as a Canadian company. Now, some companies do not qualify. And if it's even though it might be listed on the TSX, if it's not qualified as a Canadian company, so for example, it might be a foreign bank that has a ticker on the Toronto Stock Exchange, that would be a non-eligible dividend. So non-eligible dividends are 100% taxable. Eligible dividends you get a credit. There's a credit for it. So you don't pay as much tax. And basically, this is the government trying to encourage you into investing in Canada. Basically, that's what it boils down to. So, yeah. Dividend breakdowns. Now, guys, if you guys are interested, I do have a video from a while ago that breaks down the different types of things that come out of dividends. So eligible, ineligible, all of that stuff. I probably should make another one of these days, but it is on the channel. I think it's called ETF Tax Secrets. Cowboy. Chris Rock said, don't do crack because you won't be anything. You can be mayor. Maybe. Let's see. Still did a better job than Calgary's mayor. Let's see. But eligible and non-eligible dividends doesn't work in the TFSA. Yeah, there's no taxes in your TFSA. So you can put your ineligible dividends, you can put your, it doesn't matter if you got return of capital, capital gains, foreign income. None of that matters in a TFSA. The only thing that you will have to worry about in a TFSA is if you put a U.S. Dividend paying stock or ETF in there. So when I say a U.S., from a U.S. company. So if it's a Canadian company giving you a dividend, so for example, look at HYLD. They mostly invest in U.S. companies, but you won't be paying a withholding tax in your TFSA for that. Not to say there isn't any withholding tax. That's kind of another story. But there's no withholding tax that you're going to pay. Now, Hamilton, who owns HYLD, they will settle up with the IRS. Now, they're probably not settling up at 15%. A lot of these companies, one, they will categorize most of that dividend as capital gain, which they don't have to pay taxes on. And the taxes that they do pay, they might have a negotiated rate with the IRS that's lower than 15%. It might be as low as 5% or even lower. So you're not really getting hit as hard as a lot of people want to make it seem like you're going to get hit in that, when you're holding, ETFs that hold American companies, dividend payers. And also keep in mind, too, a lot of that dividend that a company like a covered call ETF in Canada, a lot of that dividend isn't even from the dividend. It's from the premiums that are charged for the covered calls. And that's 100% not going to have with U.S. withholding tax because that has nothing to do with that dividend. It's only on the dividend portion of that payment, of that dividend. So, and just to, no, I'm not going to go back to I was going to go to the whiteboard, but now we'll definitely revisit this question again and again and again. Let's see. Is there a monthly paying eligible dividend ETF? Well, sure there are. You take most ETFs if they're holding only Canadian companies. Yeah, you're going to have eligible dividends. Look at some of the BMO ones. Some of them are definitely eligible dividends. It's just, VDY. I think VDY is mostly Canadian, so that's another good example. KT, what is your opinion on Canadian ETFs, WXM and FXM, instead of a more volatile single stocks? Boy. Let's see here. Let's pull up. We'll look at the first one here. WXM. Let's bring it on up. All right, so these are Morningstar. So I don't think we've really talked a lot about Morningstar in here, but CI Morningstar, Canada Momentum Index ETF. So we'll take a look down here. You'll see small distribution yields. So these are going to be your growth stocks. These are going to be growth. That's what they're all about. Let's pull up here. And yeah, you'll sort of see. I mean, it's doing a good job. I mean, the total return on these are going to be nice for sure. You're not looking at a lot of income. So for income investors, these are probably not going to be very inviting. But if you have a dividend growth portfolio, yeah, these are fine. This is an alternative to perhaps VFV. And actually, you know what? Let's do it. Let me just do something here. I'm going to duplicate this tab. And in this one here, we're going to bring up VFV. Because VFV here, this is my go-to for, and I'm going to pull up the 1 year. This is my go-to for the S&P 500. Now, so here you can sort of get an idea. And you'll see these shapes a little similar. Other than, you'll notice, it looks like this looks a little more dramatic. The whole Liberation Day. This was Liberation Day here. But nonetheless, it's still kind of the same general idea. So what do I think about them? I think they're fine. Now let's take a quick look at FXM. All right. And so this here is the Canada Value Index. All right, and once again, and you'll notice it looks a lot similar. The markets have been doing the same thing on both sides of the border for the most part. Here's Liberation Day, and here's that strong bull market that we're currently in. This is looking great. So yeah, these are just sort of similar flavors to like VFV, VDY. So there's more than one way to sort of hit at it, but I do like it. I do like both of these. I think they're fine. I think they're absolutely fine. I normally talk mostly. I normally hit Vanguard first, only because Morningstar not as mainstream, but yeah, I think these are good ETFs for sure. Paul, be careful in retirement trying to live on dividends in a non-registered account. They get marked up 38% and could put you over the OAS clawback. So technically dividends in a RRSP, RIF, no markup. Yeah. So that's one of those things too. I mean, you want the core of your income coming out of your TFSA in retirement. Tax-free, doesn't mess up anything. But I always say, work out the math, figure out your, and even work out more than one scenario just to sort of see which way you can keep the taxes in your favor opposed to the CRA's favor. So eBank is good to go in a TFSA. Yeah, I like eBank. So eBank, of course, that's the other Hamilton one. That's the European one. So yeah, I think eBank is fantastic in a TFSA. So yeah, if you had two, so let's say you had eBank and bank, and one of them you were thinking of putting outside of your TFSA, I would put bank outside the TFSA and eBank in the TFSA. Yeah, absolutely. Michael says using the RSP to invest lowers the tax bracket. Why is this bad? Well, that's not bad. It's not bad. But what we're sort of talking about with the whole pulling out of your RRSP is a couple of things. First of all, your TFSA, tax-free, it's like a superpower. You want that needs to take priority over when it comes to filling things up. So when it comes to let's just look at it this way. So as you are working towards retirement, not retired or anything like that, obviously your TFSA normally is your number one place to go for investing under most circumstances, but there are some exceptions. One, if you have a job that does RRSP matching, you want to match to the max on that job because that's free money. So you don't want to, you want that going into your RRSP. No ands, ifs, or buts about it. The second exception is if you are holding a high dividend U.S. stock. You want to avoid the whole withholding tax, drop that into your RRSP as well. Then your third is if you do want to cut back on some taxes, you can drop that into your RRSP as well. So the whole idea is that as you use it in retirement, you should be in a lower tax bracket. So you're saving money overall going to the tax man. All right, that's all fine and dandy. But where the problem comes in is when you get closer to, your end, if you're leaving that to, let's say, your kids, they will get hit with the full taxes on that. It will be 100% taxed. So they will feel, they'll lose a bit of money. Basically they'll tax it 100% at their marginal rate. When I say 100%, I don't want to say they're going to just say, they're just taking the whole thing, it's taxed. No, they'll tax the entire amount at the marginal rate. So that is something you would end up paying. Well, not so much you, but your estate would end up paying that before they received it. Whereas if you have it in another account, like if your TFSA isn't full and you move some of that into the TFSA, that's going to get a better tax treatment. So that's kind of that whole idea. But like I said, it's still a good account. And, if you have, like, let's say, for example, if your spouse is much younger than you, you can leave it to them and they don't get hit at that marginal tax rate. They do get a break as well. But then they're left in that situation when they get older, if they have a giant RRSP and they want to leave it to the kids, then they have to deal with that. So one of the things with the meltdown, it's kind of the general idea, is that if you have, let's say, for example, if your TFSA isn't full and you are having some lower income years, sometimes it's not a bad thing to pull a little bit out, sort of bleed it out a little bit from the RRSP and move it into the TFSA so that you can build up, especially when you move into retirement. You can build up, if you're looking for income, you can build up an income portfolio that you can then have pumping a bunch of cash coming out of your TFSA that you can use That's not going to impact your OAS. It's not going to impact if you're lower income. It won't impact your GIS. So it's just a kind of a neat little thing here. All right. Fred says, do you know anything about Aduro Technology, ticker ACT? I've looked at them before. I don't currently hold any of them, though. All right, let's see here. Let's see here. ACT. All right. And you're saying, yeah, ACT, Energy Technologies. So yeah, I don't know a lot. I don't know a lot about them. I haven't really researched them. I've run into them from time to time. Oh, wait a minute. I'm in ACX. ACT. All right. Enact. Is that? No, you said Aduro. I know. Just let me try something here. Because if I remember correctly, Aduro, something to do with, yeah, here it is, Clean Technologies. All right, yeah, same idea here on the CSE. We'll grab this one here. Yeah, Aduro Clean Technologies. I think they're using some kind of novel way to create energy. I can't remember exactly what it is here, but let me see here. Yeah, so a novel chemical conversion process to transfer waste plastics into low-grade renewable oils. So yeah, I love the idea. I love the idea of what they're doing. I think there's a place in the marketplace for them. I have not, like I said, I haven't invested in them, but I do like what they do. Now, let's just give me a second. Let's pull up the key data here. This is one of the things that stops me. Is return on equity negative 133.85. Sometimes with newer companies or startup companies, this can be an issue. Now, I don't know exactly how old they are. Now, they do have a good debt to equity. They only have 1% debt to equity, so they're not deep in debt. But sometimes this will be something that would stop me. I would want to know why it is like this. You know, are they currently investing? Are they investing in infrastructure? Is it maybe they're doing some good stuff here? How close are they to becoming profitable? Because right now they're not. Those are the type of questions I would want to know about Aduro. So I personally wouldn't jump into Aduro, but I like what they do, and I think there is some potential there in the future for them. But I would want to see. I would need to do some deeper research to find out why they're unprofitable and what's their road to profitability. Those are kind of my big things. But keep in mind, this is the type of stock, if you love what they're doing, it's the type of stock. I always talk about play money where you have a little bit of extra money where it doesn't matter if you lose it. This would be a play money stock for sure. All right, and Cowboy sold out at 6. Let's see, this chip bag says tangy Lay's potato chips are a Canadian favorite. Nice, I love it. And Cowboy says sold at $6.50. Yeah, and it's what is it now? $23.62. So, and I mean, and here's the thing. Even though I was a little harsh, when you actually look, they've been moving in the right direction. Like, I cannot dispute that. Like, this is a really good return on investment so far. But like I said, I would want to dig in a little bit deeper. I want to know what their road to profitability, and this looks, like they could be in better shape. Like, here's an interesting thing too. I don't have it right here. Actually, it's not showing me, but I would also want to know when their last quarterly was, because if their last quarterly report was back in here, it's missing a lot of that extra growth. So maybe those numbers will change after their next quarterly. So that would be something to look at as well. All right. Yeah, absolutely. All right. Let's see. Lay's All Dressed is the name. Supposedly you guys love it. All Dressed is popular in Canada. Yeah, absolutely. Chips and vinegar and poutine and donaires is where it's at here. Oh, yes. Actually, there's a chip company on the East Coast called Covered Bridge. and they make lobster. They make lobster potato chips. They don't really taste like lobster. You get a slight hint of a lobster smell, but they don't taste like it. Yeah, and the no well that's with the growth. Brand new stock. Yeah, absolutely. All right, let's see. Paul says I signed up to the work RRSP matching up to 3%. Will not help as will be in the BC combined 22.2% rate in 2025, but a free 3% matching is free money. My withdrawal rate will be 22.2% also. Yeah, absolutely. Salt and vinegar barbecue, tangy, sour cream, and onion mixed into one. Add gravy and you got delicious grub. And Cowboy says started ACT under $1. Fantastic. In your opinion, where the market will move towards 2026? Gold, silver, energy, or economy technology? Whew, that's a big question. That's a big question. So toward 2026, so between now and 2026, I expect things to pretty much continue the way they have been. I think the piper will have to be paid in 2026, and that could be very interesting. It could see the market crash. It might still be good for gold, though. Gold and silver. Will energy rebound in 2026? Maybe. We'll have to see. A lot of it will depend on what OPEC is going to do next. But yeah, I would love to see a rebound in energy. Technology. Well, that's an interesting one. Technology tends to fall hard in a bear market. The last one, technology actually led the way into the bear market. But at the same time, AI it's been growing so fast. It's pretty much everywhere. So it's going to be interesting to see, can AI prop up the tech sector while everybody else falls? I don't think it can. I think it might slow it down. I think it might make it into a more of a milder bear market for technology. But at the same time, all it takes is for people to not to lose a lot of faith in AI, or at least in the profitability of AI, and that could definitely push things down. So I will defense one of the things I do at the beginning of the new year is I make all my predictions for the following year. I also review my predictions. I'm not looking forward to reviewing last year's. I've had a really good track record up until this year. I think my predictions for 2025 are going to be absolutely, I don't even remember what they are, but I think they're going to be wrong, because this year has defied a lot of things. All right. Good for you. Cowboy made money. Let's go Facebook. Back to 95. AI dancing and flying cats. All right. I like it. Flying cats. Oh boy. Recipe and money. Have a prime rib roast is smoker. Your combos have me looking for chips. There we go. Yep. Crack out the smoker. Smoke some meat. Gotta love it. BitUnex exchange fails to honor promised compensation from the liquidation on crypto where oracles had the wrong prices and CoinGlass was down. Yikes. All right, guys. Oh boy, we're at 1 hour, 48 minutes. That's long enough for this, but we will be back here again on Friday. We'll do this all over again. I can't wait to see what's going to happen between now and then. Let's hope the market can stay sane for the rest of this week. Until next time, guys, I will bid you all a wonderful evening, and we'll see you again on Friday. Take care. Bye-bye.